I understand that I'm accountable. I'm the face of ANZ. I am the chief executive. And so I imagine, yes. Now, the point here is we have to work through and actually uncover what happened, why and how, make sure it never happens again.
Responsibilities of gatekeepers, responsibilities of such significant and successful organisations in markets like Macquarie, and responsibilities for reporting so that we can understand what's going on in markets in terms of integrity and where the risk is. These are really important.
Another big Australian bank has found itself in trouble with the regulator again. What's going on at our biggest financial institutions, and how much should investors care? Hello, I'm Chris Bourke and welcome to the Bloomberg Australia podcast. This week we've just wrapped up the latest earnings season for our biggest banks, where they gave us a glimpse under the hood of their business at a pretty precarious time for both the local and global economy. That's been somewhat overshadowed by an announcement that Macquarie Group's securities business is being sued by the Australian Securities and Investments Commission. And let's not forget the ongoing travails at ANZ Bank, whose new boss started this weekend and has a fair bit to contend with. To unpack all of this, I'm joined by Bloomberg's Sydney-based finance editor, Adam Haigh. Adam, welcome to the podcast.
Hi, Chris. Great to be with you.
So, Adam, on Wednesday morning, our biggest bank, CBA, was proudly boasting of an increase to its quarterly cash profit, but its thunder was pretty much stolen by Macquarie with news of a civil action by ASIC. Tell us what we know about that so far.
Well, what we know, Chris, is that essentially Macquarie have had problems with the way that they've been reporting some trades in their securities business. And this really focuses on short selling trade. But really, this is not about the trades themselves. This is about how the bank reports these trades. And what ASIC are saying is that over a period from December 2009 all the way through to February 2024, so more than 14 years, there were problems and irregularities with the way this data was reported, which they have to report this to the regulator. So what we're seeing really is a quite significant issue here around the process, around the technology that's being used to report this. And indeed, it is a big deal because it spans such a large amount of time. And it also is happening at a firm that really prides itself on risk management and prides itself on really being, one of the best in the world at making sure what it does in the trading floor is the best of the best. So it was quite a big shock. And this isn't the first time that ASIC have been targeting Macquarie in recent times.
Yeah, that's a good point. I guess that's the bigger picture here. In the past year or so, there've been a few concerns from ASIC. What else has the regulator been targeting Macquarie for?
Yeah, so one of the other things, and this just came to light kind of more recently, the start of May, was around issues in Macquarie's commodities futures business. So this was around derivatives and futures trading and problems that they had there. So in that instance, there isn't a civil action. There's no lawsuit. What they've done there is just basically said, listen, you need to review what's happening here. You need to put a remediation plan in place, and you need to do a number of things to show us over time that things are getting better there. So that's clearly an interesting case, but quite different to this one. But it does add to a couple of others as well. So really, over time and over the last 12 months or so, there have been a number of these that are building now to a little bit more of a crescendo. And, it does speak to a kind of a wider concern about how these issues are kind of happening at Macquarie.
Yeah, and of course, let's not forget about ANZ, which has also been in the spotlight lately. That's been a bit more focused on bad behaviour, including alcohol and substance abuse, which, as we know, led to a lot of pressure on CEO with now departed CEO Shane Elliott to clean up the culture there. What's the current status of regulator actions against ANZ at the moment?
Well, ANZ is still facing, Chris, a number of different probes, and one of the main ones is this probe that they're facing into these allegations of market manipulation over the sale of government bonds in Australia, and ANZ's role as a risk manager during that sale process. most of this came to light, almost a year ago now. But really, the back end of last year and the back end of Shane Elliott's career was really almost defined by some of these issues, and the ASIC probe on the one hand, but also another investigation that was being underdone by APRA, the banking regulator, and problems that they saw, which ultimately meant that the bank is having to hold more capital in reserve, and it is putting some strain on the bank's reputation. And so these probes, we still don't know. They haven't concluded. We don't know how they're going to unfold, but they are, still going on. And of course, with the new CEO coming in, it's going to be a huge focus of his to try and, steer some of the reputational repair work over at ANZ.
Yes, you are, of course, referring to Nuno Matos, Portuguese banker, first job in Australia, I believe. Is he the right person for the job? What is it about his background that makes him a suitable troubleshooter, which our colleagues wrote last week in that Bloomberg profile?
Yes, I mean, he does have a lot of experience, Chris, in many other markets. And I think that's really what people are excited about, the potential for him to really take action here. And a lot of that focused on his America's experience with HSBC. He was there at a time when there was a lot of problems around what HSBC had been doing with drug cartels in its Mexican business, and he steered the ship through that. And there was an agreement between the US and HSBC around that. So he does have form in terms of being able to manage reputations of very leading institutional bank names. And then he also ended up running HSBC's wealth and personal banking on a global scale. So clearly brings something to ANZ, both from that global reach, but also that sense of having been through some reputational repair work in the past. And that does put him in good stead to kind of clean up some of these problems that have hampered Elliott's legacy and ANZ more broadly.
Yeah, he's got some tough challenges there, and we wish him the best of luck. We've also seen regulator actions against ASIC recently, also some super funds for things around risk management and delays to things like death benefits and insurance claims. Are our biggest financial institutions getting a bit sloppy, or are we just really well regulated?
Well, I think it's very clear, Chris, that ASIC and regulators more broadly are really going after some of this malpractice in a big way. And I think Joe Longo, the chair of ASIC, has been very kind of public around that in recent times. And he's very much, showing how he is able to do that with an increased level of activity, not just with civil suits themselves, but also, actions and remediation plans that are going on. So interesting that you mentioned as well what's happening with the local exchange here, ASX, which is the main kind of derivative stock exchange, and does a lot of handles a lot of FX settlements and things like that. So a really big player in the market, in many ways the market leader in Australia, and they've been under fire as well for a kind of a series of technological upgrades that the company's trying to do over a number of years and problems there. So Longo and ASIC are trying to really look at the broad financial landscape in Australia and say, listen, where are we just not quite performing as well as we should do? And really just trying to get these organizations to tighten up with the resources that it has. And people do often, levy that kind of criticism against ASIC. They say, it's a bit under-resourced. It struggles sometimes to take big swings at problems that are existing in financial markets. And maybe there's a reason to believe that actually in recent months they're increasing their appetite to go after some of the really more serious problems that are happening in the markets here.
Yeah, and these problems that they are uncovering, Are investors paying attention to these things? Have they had any impact on share prices, or are they likely to down the line?
Well, I think, Chris, that any kind of issues around compliance and risk management are always taken very seriously by investors, and indeed, the Macquarie chair last week was very clear. Glenn Stevens, who's a former RBA governor, of course, it is very clear to point out some of the issues that Macquarie had and what they were doing to remedy those situations. So I do think that, investors take this very seriously, but whether or not it actually shows up in share prices is somewhat of a moot point, because I think if you look back to ANZ and initially when news broke of some of the allegations around the potential market manipulation there, investors actually didn't at first seem too interested in what was going on in terms of the impact that might have on profitability and reputation, and whether it would sour share prices. But I think one bank that has stood out and that is CBA, Commonwealth Bank of Australia, the biggest bank, and that hasn't really been in the firing line with some of these actions. So there is maybe some credence to the idea that if you're not in the headlines with some of these things, then investors will be prepared to reward it.
Okay. When we come back, it's a wrap for the big bank's latest reporting season. What did we learn? Welcome back to the Bloomberg Australia podcast. You're here with me, Chris Bourke. I'm talking to Adam Haigh, our Sydney-based finance editor, about the state of our biggest banks as we wrap up the industry's latest earnings season. So, Adam, as I said earlier, we've just had Commonwealth Bank, the country's largest lender, give us their quarterly trading update on Wednesday, the last of our banks to report their latest numbers over the past week or so. Was there anything in CBAs that made you think, yep, this bank deserves to be trading at almost $170 a share? No doubts about it.
Well, I think the big positive, Chris, to come from the CBA announcement is just kind of almost like a vindication of CEO Matt Comyn's strategy to try and go after market share in business lending. So this is lending to companies rather than the focus on its mortgage business, which it's still the main player in Australia. But really what it's done recently is to try and tilt that strategy more towards trying to go after business lending. And you could see that in the numbers. You could see how that had been growing far quicker than the broader market's been growing in that segment. And that has been one element of why that stock price has been doing so well, because there is more growth there, and they're seeing more continued growth there than they are in home lending. And so it is somewhat a vindication of that strategy. But I think more broadly, it was a reasonably positive update. And interestingly, they didn't really see a huge amount of uptick in arrears, so in problem loans,
right.
Both in home loans, but also broadly in the consumer space. So it didn't kind of signal any big worry about arrears ticking up across the economy.
Yeah, obviously we also had NAB, Westpac, ANZ and Macquarie report. Was there any kind of general theme running through those reports that you picked up on?
Well, the main thematic threading them all together, Chris, I think really is just the pressure that continues in both the key business areas for all the domestic banks. So that's home lending. That margins continue to be under pressure there. Competition is very fierce. The RBA have started to reduce interest rates in Australia. And although the outlook is somewhat cloudy for what interest rates will do from here, there's a general consensus, and markets are pricing this, that rates will be lower by the end of the year than where they are today. And what does that mean for banks' ability to make money on home loans? Well, it's continued pressure. And so that, it gets tougher from here. And that's really been the messaging from the CEOs there. And that's what you're seeing in the numbers. So you're seeing that on the home loan side. And also, as we've been talking about on the business lending side, there are winners in the sense that CBA seems to be taking market share there and getting rewarded for it. But they even acknowledge that there's still pressure in in that business. So I think that they're the main themes, really, that this is actually a pretty tough environment for bank profitability at the moment, right? And it's only going to get harder as the year goes on.
So did you get a sense from the commentary in those reports about how they're feeling about the outlook, especially, as you say, with the interest rate cycle turning? Are they more optimistic or less?
Well, I think really what they all seem to suggest, and the common theme was that maybe Australia has a little bit more resilience relative to a global economy that's in a pretty tough place. So they all wanted to kind of point to the idea that, yes, there's a lot of uncertainty out there. There's the changing nature of global trade flows that everyone's very aware of. But actually, Australia's place within that global context seems okay, seems actually not too bad at all. And in which case, that does offer a little kind of glimmer of hope for banks being able to operate in that environment, because it's an economy that's going to, outperform relatively well, globally speaking. And so, maybe profitability can hold up to a degree. And, for shareholders, it might not be too bad a place to be.
Let's not forget these banks have gone gangbusters over the past 5 years or so. I think if you've held CBA, well, most of us probably have or do in our super fund, that's been a gain of, I think, something like almost 180% over the past 5 years, and the others haven't done too badly either. What are analysts saying about this, about the future here? Can they really sustain the kind of momentum that we've been seeing in recent years?
Well, I think if you look at kind of the analyst commentary, there are some analysts. So, for example, Thomas Strong at Citigroup, after the CBA result on Wednesday, was pretty clear that there is enough here to kind of maintain some level of growth and upside to the share price at CBA from here. So there is that camp. But then, there are more negative analysts on the other side that are just saying, listen, especially with banks like CBA that have had such a good run up in prices, continue to pay these decent dividends, we should maybe just readjust a little bit our expectations of how much they'll be able to do this in the coming kind of 6 or 12 months, especially as rates overall come down. The economy's in an okay place, but it's certainly not too bright, obviously, if they're having to reduce interest rates over at the RBA. So this idea of just maybe realign your expectations and don't expect, too much upside from here.
Yeah, and I guess as we were saying, that these banks do feature heavily in many of our investments and in our super funds. We should be it should be seen as a fairly positive thing that regulators are keeping track of what they're doing, and also these banks in some cases are self-reporting these problems to the regulator. I guess we should point that out as well.
Yeah, I think that's important to remember, right? You want an environment where the regulator is working very closely with banks. They're sharing a lot of information, especially when things go wrong. They're working to improve things. They're always looking to try and update processes to make them better. When these things fall under the radar and don't get picked up by regulators, it's almost more of a concern. So I think there's credence in that idea that at least these things are out in the open and people are making changes. Ultimately, the bosses of these companies want to run them as well as possible. And, risk management and reputation is, of course, top of the list in terms of what they're trying to achieve.
Thank you, Adam Haigh, and thank you for listening to the Bloomberg Australia podcast. I'm Chris Bourke. This episode was recorded on the traditional lands of the Wurundjeri and Gadigal people. It was produced by Paul Allen and edited by Ainsley Chandler and Rebecca Jones. Don't forget to follow and review the show wherever you get your podcasts, and sign up to Bloomberg's free daily newsletter, Australia Briefing. Go to bloomberg.com to subscribe.